Howdy, swings. Today, technology and semiconductor stocks went lower relatively big, with no clear reason for the decline. Notably, the S&P 500 slightly fell with no correction in the financial sector. Is this the start of a market downtrend, or will the market turn upward? Let's take a look at Fullhapce daily swing market forecast to get some answers. Market movements were mixed, with semiconductor indices falling and oil prices rising. S&P 500, 5,616.84, minus 0.32% down. Dow Jones, 41,240.52, 0.16% up. Nasdaq, 17,725.77, minus 0.85% down. Russell 2000, 2,225.2, minus 0.09% down. Phil Semicon, 5,097.35, minus 2.51% down. Texas crude oil future, 77.11, 3.05% up. The energy, media, select financials, consumer staples, consumer discretionary, utilities, materials, and transportation sectors performed well. The technology, travel/leisure, and housing/building materials sectors weakened. Stocks saw a noticeable drop in value on Monday, with tech stocks seeing the biggest declines. Investors may have shifted their attention from tech stocks to cyclical or value stocks after Powell's speech, which seemed less stringent on monetary policy. Concerns may have been heightened as a number of tech companies reported earnings this week. It's also worth noting that the stock market can be unpredictable for seasonal reasons. Tensions between Israel and Hezbollah eased over the weekend, and discussions on a ceasefire in Gaza are ongoing. Chairman Powell's comments in Jackson Hole on Friday had a positive impact on financial markets, favoring riskier investments. The Bureau of Labor Statistics' Standard Labor Report on September 6th could influence the decision to cut interest rates by 0.5% on September 18th, assuming that the July personal consumption expenditures and August consumer price index reports show no significant inflationary concerns. In addition to the U.S. Federal Reserve, the central banks of Canada, the European Central Bank, Sweden, and Switzerland are also expected to cut rates on September 18th, and financial markets are anticipating rate cuts next month. Here we present the daily market forecast for swings. The overall upside potential for the market this week is strong. However, the daily market potential looks slightly negative at the moment. Moreover, daily market uncertainty has increased and is back to risky levels. The lack of a correction in the financials and biosectors today makes it a no-brainer when it happens. Therefore, the SPX index, currently at 5650, is expected to struggle for the next few days, and this situation could lead to temporary market fluctuations and uncertainty until Wednesday. Despite the negative outlook, there may be some improvement on Tuesday. This is because traditionally, corrections in financials and biotech have had less of an impact on the SPX. So when they do occur, the market is often driven higher by other sectors. It is possible that the market's modest uptrend will resume early next week. The rally ahead may be a steady, somewhat boring climb rather than an explosive one. Here are some additional insights. As the S&P 500 index, SPX, struggles to break out to its highest close since July 16th, several positive factors are supporting the market. Favorable economic data that is neither too hot nor too cold, Goldilocks data, policies that make borrowing cheaper, monetary easing, strong corporate earnings. If these positive factors continue, the market decline is expected to be minimal and short-lived. The financial and biosector corrections may be postponed until the middle of next week. Let's see the devil's advocate. The opposing scenario suggests that the market might decrease and reach the SPX value of 5,450. If this happens, it could present a chance for optimistic traders to purchase more at lower prices. The rationale for this scenario is as follows. Oil prices may rise because of the ongoing tensions in the Middle East, Libya's oil supply problems, and the conflict between Israel and Hezbollah. Russia has launched a massive missile and drone attack on Ukraine. Global trade issues are worsening, as evidenced by Canada's new taxes on Chinese-made electric vehicles, steel, and aluminum. While there is merit to the contrarian scenario, We think a sharp drop is unlikely as the big uncertainty has just been cleared up by the Fed chairman's speech, and there are no major events until Wednesday's Nvidia earnings report. Nevertheless, viewers should be wary of the concerns raised by the other side. Here is the conclusion. We believe that the weekly market is in an upward rally, but the growth potential of the daily market is low and depends on temporary volatility. In our calculations, the daily volatility of the daily market has reached a critical point, and uncertainty has increased. As a result, the SPX fell to 5,616 even without a sector correction. However, the influence of financials and biotechs on the SPX is traditionally low. If a correction occurs, the market could fall, but we would not be surprised to see a modest rise. It is possible that we will see an improved market on Tuesday. As such, it may be wise for traders to remain optimistic but pay more attention to asset protection. Traders may be wise to consider both our main forecast and opposition scenarios to manage risk effectively. Thank you for watching. Fullhapce Intelligence, the best investment partner for swing traders.